In his bid to become the next Prime Minister of the UK, Rishi Sunak made a fresh commitment to reduce income tax in the upcoming legislature. The former Chancellor said he will lower the basic rate of income tax from 20% to 19% in 2024, then further reduce it until it reaches 16% by 2029. For more of these headlines, cross over to London, where we're joined by Lukman Otunuga, Senior Market Analyst at FXTM. Lukman, good morning to you. Thanks for joining us. I guess we can begin in Asia. The slowdown in manufacturing activity in China, what do you make of it?
Happy Monday, voters. Thank you for having me here. Honestly, when I looked at the figures, it really left a sour aftertaste in the mouth, and probably in the mouth of many investors, and slightly dampened the market mood and took away the optimism of the second largest economy in the world. Reopening, looking deep at the figures, the fact that the China Manufacturing Purchasing Manager Index has fell back into contractionary territory is likely to feed into that slowing growth narrative and fuel concerns of the world's second largest economy. We have to keep in mind, voters, that the country was already facing an uphill battle with those lofty growth targets. And the fact that manufacturing activity is slowing and it's trying to sort itself from the COVID-19 developments, I think is really going to hit sentiment towards the country moving forward. We saw most Asian shares actually fall after the report was released, while the Japanese yen appreciated. I think this sentiment is going to roll over into the next few days.
I want to cross over to the UK. Rishi Sunak saying he can cut taxes if he becomes Prime Minister. Is this music to the ears of UK firms?
Yeah, I mean, a 20% income tax cut by 2029 is music to ears of many. You know, the idea of having more disposable income, you know, that's a real welcome development. But, you know, with such lofty expectations and promises, some hard questions need to be answered. You know, like, number one, is this possible? Is the tax cut even affordable? And how will they plug the hole? You have to keep in mind that in the UK, we've got a lot of public services sectors like health, education, law enforcement, military. You know, with the tax cuts being in place, will this result in more job loss, or would it drop in the quality of the public services? So, yeah, in hindsight, you know, looking at it, you know, the idea is quite encouraging, but the reality, that's another question entirely.
And next month, we'll find out who the next Prime Minister will be to replace Boris Johnson. What's your view on global markets for this week as we kick off a new week?
It's going to be a big week for markets, Rotus. There's so much going on. I don't think I'm going to get any sleep this week. We've got, of course, earnings. We've got the Bank of England rate decision later in the week. We've got the OPEC Plus meeting. We've got the US jobs report on Friday. And on top of that, we've got all these themes pulling and tugging at sentiment. We expect a lot of volatility across equity markets, but, you know, all eyes are going to be on the NFP on Friday, the BOE rate meeting on Thursday, and earnings are what OPEC has to say midweek.
What about currencies? How are you seeing that? You mentioned the yen just a moment ago.
Yeah, certainly. Look, the yen is staging a sharp recovery. You know, it's really funny how the yen is playing out. And I remember the conversation we had many weeks ago, you know, interest rate differentials. You know, while the Bank of Japan remains the most dovish central bank out there, other central banks across the world have brought out their big guns and monetary artilleries to face against raging inflation. So we expect the yen to continue its performance. Looking at the dollar remains weak. Since the Federal Reserve raised that jumper rate hike last week, it seems that the dollar's finding no love, and it's likely to weaken further as investors dial back expectations of how aggressive the Fed is going to be for the remainder of 2022. I think the big one is the pound, though. The pound could turn really, really volatile this week. There's a lot of talk about the Bank of England raising rates by 50 basis points. But if we look at the past, it's been quite timid and cautious, raising rates consecutively by 25 basis points. So the pound could receive a lifeline or be disappointed sometime this week. Let's see how things play out.
Indeed we will. What about gold? Will it maintain its 1,700 levels this week?
Yeah, gold has been thrown a lifeline in the form of a softer dollar, falling bond yields. The fact that the Fed has taken a step back in how aggressive it's going to be. Gold has been an enigma, truly. I looked at prices this morning, saying it's actually staging a rebound, and the dollar continues to weaken. We can see gold continue to shine over the next few days.
And how about oil prices? You mentioned OPEC, that meeting this week. How do you think oil prices are going to work out this week?
So oil prices are a big one. You said it earlier today that, you know, oil prices were a bit lower. It remains pulled and tugged by conflicting forces. On one side of the equation, we've got, you know, ongoing geopolitical risks, the fact that the market conditions are tightening. And the other side of the equation, we've got, global growth concerns that impacted the demand outlook. We know that Joe Biden went to Saudi Arabia, a few weeks ago to request for an increase in oil production. It will be interesting to see if anything of that is said in the meeting this week. Markets are not expecting the cartel to change their economic strategy, but anything unexpected could spark crazy movements in oil markets. We have to keep in mind that oil is still up roughly 30% year to date, so it's still in a good place.
Excellent stuff. Senior research analyst with FXTM, Lukman Otunuga. Lukman, always a pleasure going through global headlines with you. Thank you so much.